You're watching Silver News Daily. Subscribe for more. Did you know silver prices could skyrocket to $500 per ounce? Sounds unbelievable, right? But stay with me. Today we're diving into the insights of renowned investment guru Rick Rule. With decades of experience in natural resource investments, Rick has a bold prediction that could reshape the market. Why does he believe silver is massively undervalued? And what could drive this dramatic price surge? In this video, we'll uncover the factors that might just send silver soaring. You don't want to miss this. Keep watching to find out more.
There's nothing in the world that makes me happier than this, by the way. The fact that I can fill my boots for long periods of time with very little competition around assets that seemingly to me have absolutely no downside except perhaps political risk and tenfold upside. So I really like that theme. The other thing I like is
Rick Rule is a name that resonates with anyone serious about natural resource investments. With over 4 decades of experience, he's seen market cycles come and go, and his predictions have often been ahead of the curve. Starting his career in 1974, Rick quickly established himself as a formidable force in the investment world, particularly in sectors like mining, energy, and precious metals. Rick isn't just another talking head. His track record speaks volumes. He's the founder and CEO of Rule Investment Media and has been a key player in the resource investment scene. Over the years, Rick has guided countless investors through the complexities of the market, sharing his deep understanding of how natural resources can offer incredible returns. His insights are grounded in years of research, hands-on experience, and a keen eye for spotting undervalued assets. What makes Rick's predictions particularly compelling is his ability to see beyond the immediate market trends. For example, he has a knack for identifying the underlying economic and geopolitical factors that can significantly impact commodity prices. His approach isn't just about the here and now. It's about understanding the broader picture and anticipating how different variables will play out over time. Rick Rule has often emphasized the importance of contrarian investing, buying assets that are undervalued and out of favor. He believes that silver, much like other natural resources, is currently in this position. He points out that while silver prices have been relatively stagnant compared to gold, the fundamentals suggest a different story. According to Rick, silver's industrial applications, combined with its historical role as a monetary metal, position it uniquely for a potential breakout. In recent interviews, Rick has highlighted several key points. He talks about the growing industrial demand for silver, driven by advancements in technology and renewable energy sectors. Silver is a critical component in everything from solar panels to electric vehicles. And as these industries expand, so too does the demand for silver. Additionally, he notes that silver is significantly undervalued compared to gold, making it a prime candidate for investment. But it's not just about industrial demand. Rick also points to the current state of the global economy. With inflation fears and economic uncertainty on the rise, many investors are looking for safe haven assets. Historically, precious metals like gold and silver have served this role, protecting wealth during turbulent times. Rick believes that as more investors seek refuge from inflation and market volatility, the demand for silver will surge, pushing prices higher. Rick Rule's insights are not just theoretical. He backs his predictions with data and a clear understanding of market dynamics. He has often pointed out that the silver market is much smaller than gold, meaning it takes less money to move silver prices significantly. This volatility, while risky, also presents a tremendous opportunity for savvy investors. In summary, Rick Rule's expertise and deep understanding of the natural resource sector provide a solid foundation for his bold prediction about silver. His belief in silver's potential is not just based on gut feeling, but on a comprehensive analysis of market trends, industrial demand, and economic conditions. As we move forward, Rick's insights will serve as a crucial guide to understanding why silver might just be the investment opportunity of a lifetime.
Example that one could pull in the world, okay, so it's an outlier. But it tells you something about the exploration optionality involved in these companies. I have constructed, for one family office, a natural resource portfolio that is entirely royalty and streaming companies. When I took them through the various opportunities available to them in natural resources, and I said that the only thing above raw commodity that gave you commodity price participation without operating risk was royalties. They said, how much of a natural resource portfolio, spanning market cap and spanning companies, could you construct using royalty and streaming companies? I said, well, conceivably 100% if you were willing to have me leave out refining and marketing in the oil and gas business. And we were able to do that.
Yeah.
There's a lot to be said for the right investor and speculator considering utilizing royalty and streaming companies for the entirety of their natural resource portfolio. You won't get as much upside in a raging bull market. Ironically, because very high margin companies like royalty companies have a less percentage increase in their margin from increasing prices than less efficient companies. You know, if you're a gold producer and you're making the stuff for $2,200 an ounce and selling it for $2,300 an ounce, and the gold price goes to $2,400 an ounce, your margin increased, well, it doubled. If you're Franco-Nevada and your margin right now is 90%, 96%, and the gold price goes up $100, it's pleasant, but statistically it doesn't matter. So ironically, in a rip-roaring bull market, the lousiest companies do the best, albeit with risk that's unacceptable for my portfolio.
Right.
At 71 years of age, after 50 years in natural resource equity markets, one of the things I've learned from my own money is that you can take away some of my upside if you...
Let's take a closer look at the current state of the silver market. As of now, silver prices have been relatively subdued, hovering around $32 per ounce. While this might not seem impressive compared to gold's price of over $2,000 per ounce, it sets the stage for a potential breakout that savvy investors like Rick Rule are keenly aware of. One of the most intriguing aspects of the silver market is its dual role as both an industrial metal and a precious metal. This dual demand creates unique dynamics that can drive significant price movements. In recent years, industrial demand for silver has been steadily increasing. Silver is a critical component in a variety of high-tech applications, including solar panels, electric vehicles, and 5G technology. As the world shifts towards greener energy and advanced technologies, the demand for silver is expected to grow exponentially. In the renewable energy sector, silver's role is indispensable. Solar panels, which are key to the global push for sustainable energy, use a significant amount of silver. The photovoltaic cells in these panels rely on silver to conduct electricity efficiently. With governments and corporations around the world investing heavily in solar energy, the demand for silver is set to rise dramatically. Electric vehicles, EVs, are another major driver of silver demand. These vehicles use silver in their electrical components, from batteries to wiring systems. As the EV market expands, driven by both consumer demand and regulatory mandates, the need for silver will only increase. Analysts predict that the automotive sector alone could account for a substantial portion of future silver demand. Moreover, the ongoing development of 5G technology is another significant factor. Silver is used in the production of 5G infrastructure and devices due to its superior conductivity and reliability. As 5G networks continue to roll out globally, this will further boost the demand for silver. On the monetary side, silver remains a popular investment choice during times of economic uncertainty. Historically, silver has been viewed as a safe haven asset, much like gold. With the current global economic climate characterized by high inflation rates, geopolitical tensions, and market volatility, investors are increasingly turning to precious metals to safeguard their wealth. This renewed interest in silver as an investment can create additional upward pressure on its price. Another important factor to consider is the supply side of the silver market. Silver mining has faced numerous challenges in recent years, including environmental regulations, labor issues, and the depletion of easily accessible deposits. These factors can constrain the supply of silver, further amplifying the potential for price increases as demand continues to grow. Additionally, silver's price relative to gold is another point of interest. The gold-to-silver ratio, which measures how many ounces of silver are needed to purchase 1 ounce of gold, is currently at historically high levels. This suggests that silver is undervalued compared to gold. Historically, when the ratio is this high, it often precedes a significant rally in silver prices as the market corrects itself. In summary, the current market overview presents a compelling case for silver. With rising industrial demand from sectors like renewable energy, electric vehicles, and 5G technology, combined with its traditional role as a monetary metal during economic uncertainty, silver is positioned for potential significant gains. Supply constraints and its undervaluation relative to gold further bolster the argument for a bullish outlook on silver. As we continue to explore this topic, we'll delve deeper into the specific factors that Rick Rule believes will drive silver prices to unprecedented levels.
The attraction is that it's a financial rather than an operating interest in an ore body. When there's a capital expenditure, if you're a royalty company, you don't get a bill. Everybody else gets a bill, but you don't get a bill. Operating expense. When they're passing out operating expenditure bills, you don't get one. When the price of diesel goes up, or the price of steel for steel balls in a ball mill goes up, or wages go up, it doesn't matter to you. Your gross is your net. So it's by nature a very, very, very high margin business. If the royalty is on a big deposit rather than a small deposit, there is also incredible upside optionality. In my experience, all deposits have surprises. Small deposits usually have bad surprises. And they don't have long enough mine lives to come back from those bad surprises. Big deposits have good surprises. And so you look as an example at Franco-Nevada, their northern Nevada operations. They've received well over $1 billion in royalty payments over 30 years for a $2 million initial investment.
That's crazy.
And their gold reserve associated with the royalty has not depleted.
Let's dive into the specific factors that Rick Rule believes could drive silver prices up to $500 per ounce. These factors combine to create a perfect storm that might propel silver to new heights. One of the primary factors Rick Rule points out is silver's significant undervaluation. Currently, the gold-to-silver ratio is much higher than historical norms. This ratio, which indicates how many ounces of silver are needed to buy 1 ounce of gold, has been hovering around 80-1. Historically, this ratio has averaged closer to 50-1. This discrepancy suggests that silver is undervalued relative to gold and has significant room to rise to correct this imbalance. Silver's industrial applications are expanding rapidly, driven by advancements in technology and the global shift towards green energy. Solar panels are a major driver of this demand. Each panel contains a small amount of silver, but the scale of solar panel production means that the cumulative demand is substantial. As countries aim to meet their renewable energy targets, the demand for solar panels, and therefore silver, will continue to grow. Electric vehicles, EVs, are another significant source of demand. Silver is used extensively in EVs, from the batteries to the electronic components. As the adoption of EVs accelerates, fueled by both consumer demand and government incentives, the automotive industry's need for silver will increase. This sector alone could drive a considerable uptick in silver demand. 5G technology is also a key player. The rollout of 5G networks requires silver for its excellent conductivity and reliability. As 5G becomes the global standard, the demand for silver in telecommunications infrastructure will rise, adding another layer of demand pressure. Silver, like gold, has long been considered a safe haven asset. During periods of economic uncertainty, investors flock to precious metals to protect their wealth. The current global economic environment, characterized by high inflation, geopolitical tensions, and market volatility, is no different. Investors are increasingly turning to silver as a hedge against these uncertainties. While demand for silver is on the rise, the supply side faces significant challenges. Silver mining has become more difficult and expensive due to stricter environmental regulations, labor disputes, and the depletion of high-grade ore deposits. These factors limit the ability of mining companies to increase silver production quickly in response to rising demand. Moreover, silver is often produced as a byproduct of mining for other metals like gold, copper, and zinc. This means that silver production is indirectly affected by the market dynamics of these other metals. If the production of these primary metals slows down, silver supply can also be constrained. Investment demand for silver is another critical factor. Exchange-traded funds, ETFs, and physical silver purchases by investors have surged in recent years. This increased investment demand puts additional upward pressure on silver prices. Rick Rule emphasizes that as more investors recognize silver's potential, the influx of investment capital can significantly drive up prices. Beyond its current uses, ongoing research and development could unlock new applications for silver. Innovations in technology often lead to new industrial uses for metals. For instance, silver's antimicrobial properties are being explored for medical applications, and its superior conductivity could find new uses in emerging technologies. Global economic policies, particularly those related to monetary stimulus and inflation control, play a significant role in precious metal markets. Continued monetary expansion and low interest rates can drive investors towards assets like silver that are perceived as stores of value. Rick Rule believes that as governments around the world continue to navigate economic recovery and inflation, silver's appeal as an inflation hedge will grow. Historically, silver has shown the potential for dramatic price increases during bullish market cycles. Past bull markets have seen silver prices rise significantly within relatively short periods. Rick Rule draws parallels between the current market conditions and previous periods that preceded substantial silver rallies, suggesting that history might be on the verge of repeating itself. In summary, the convergence of these factors, silver's undervaluation, rising industrial and investment demand, supply constraints, economic uncertainty, and supportive global economic policies, creates a compelling case for a potential surge in silver prices. According to Rick Rule, these elements combine to set the stage for silver to reach unprecedented heights, potentially hitting the $500 mark. As we continue, we'll explore comparisons with other metals and delve deeper into the economic and geopolitical influences that could further impact silver's trajectory.
Tier 1 projects that are juniors, which is to say projects that have the hallmarks of having a minimum of $10 billion in situ recoverable reserves that would be in the bottom cost quartile worldwide and the top quartile in terms of return on capital employed, but at least 25%. If those projects aren't in glamour materials, they are stupidly cheap, really, truly stupidly cheap. There are projects that look like they could develop into generational assets that are trading at below 20% of indicated NAV. These are projects that, if the drilling continues as it has happened so far, will be sold to major mining companies. And they will be sold to major mining companies for 10-figure sums. The fact that the exploration process, the delineation process, the PFS process is boring, means that people have sold off these high-quality assets in favor of, frankly, shitty assets that have more near-term momentum. There's nothing in the world that makes me happier than this, by the way. The fact that I can fill my boots for long periods of time with very little competition around assets that seemingly to me have absolutely no downside except perhaps political risk and tenfold upside. So I really like that theme. The other thing I like is grassroots exploration with high-quality teams, really high-quality teams. Intellectual capital is on sale here. I just interviewed somebody who will remain nameless because I haven't bought my stock yet, with a market capitalization of about 2 million Canadian dollars, with $1.2 million in the till, tiny company, and a veteran exploration team who have been active in a country that I like for 40 years. They've been responsible for 6 or 7 economic discoveries. Now, the fact that they've been successful before doesn't guarantee that they're going to be successful this time. But some of the past successes have been sold for, 9-figure sums. These people have spent their whole careers within 200 kilometers.
When considering the potential for silver to hit $500 per ounce, it's useful to compare silver's prospects with those of other precious metals like gold and platinum. This comparison helps highlight why silver, specifically, stands out as a unique investment opportunity. Gold has long been the go-to precious metal for investors seeking a safe haven during times of economic uncertainty. Its status as a store of value and its role in jewelry and central bank reserves make it a staple in investment portfolios. Gold has performed admirably, especially during recent economic turbulence, and continues to hold strong appeal. However, Rick Rule points out that while gold remains a solid investment, it is silver that presents the most significant upside potential at this juncture. Silver's unique position stems from its dual role as both an industrial metal and a precious metal. This dual demand creates a dynamic that gold does not experience to the same extent. For instance, while gold's price is heavily influenced by investor sentiment and macroeconomic factors, silver's price is also significantly driven by its industrial applications. The growing demand for silver in industries such as renewable energy, electronics, and medical technology adds a layer of demand that gold lacks. Platinum, another precious metal, is primarily driven by its use in the automotive industry, particularly in catalytic converters for vehicles. While this demand is substantial, it is somewhat limited by the ongoing shift towards electric vehicles, which do not use catalytic converters. Platinum also faces supply challenges, but its market dynamics are different from those of silver. Platinum has historically traded at a premium to gold, but in recent years it has underperformed relative to both gold and silver. This underperformance creates an interesting dynamic, but it doesn't offer the same broad-based industrial demand that silver does. Rick Rule emphasizes that silver's lower price point compared to gold makes it more accessible to a broader range of investors. This accessibility can lead to higher volatility, but also greater potential for price appreciation. The silver market is much smaller than the gold market, meaning it takes less capital inflow to move silver prices significantly. This characteristic of silver is crucial because it suggests that even a moderate increase in investment demand can lead to substantial price increases. Another critical point in the comparison is the historical performance of silver relative to gold. The gold-to-silver ratio, which is the number of ounces of silver it takes to buy 1 ounce of gold, is currently much higher than its historical average. This ratio suggests that silver is undervalued relative to gold. Historically, periods of high gold-to-silver ratios have often been followed by significant rallies in silver prices as the market corrects itself. This potential correction provides a compelling argument for silver's upside. Moreover, silver's price behavior in past bull markets has shown that it can experience dramatic price increases over short periods. For instance, during the 1970s and early 1980s, silver saw an explosive rise in prices, far outpacing gold. While the specific circumstances of each bull market are unique, the potential for similar patterns exists today, especially given the current economic environment and the factors driving silver demand. In addition to industrial demand, investor sentiment towards silver is influenced by broader economic trends. As inflation fears mount and geopolitical tensions persist, investors are seeking safe haven assets. While gold traditionally fills this role, silver is increasingly being recognized for its potential to provide similar protections with the added benefit of industrial demand. Rick Rule's insight suggests that silver is positioned to outperform other metals, not just because of its current undervaluation, but also due to its critical role in emerging technologies and renewable energy. The global push towards cleaner energy and technological advancements is expected to drive substantial industrial demand for silver, further supporting its price potential. In conclusion, while gold and platinum remain important components of a diversified investment portfolio, silver stands out for its unique combination of undervaluation, industrial demand, and historical performance. These factors, coupled with Rick Rule's insights, make a compelling case for silver's potential to surge to unprecedented levels, possibly even reaching $500 per ounce. As we move forward, we'll delve into the economic and geopolitical influences that could further impact silver's trajectory and solidify its position as a standout investment opportunity.
Premium to what it was worth. You were basically paying for a while 3 times cash when they had no royalties. They've slowly deployed the cash at the same time that the share prices come down. Very, very, very virtuous circumstance. There is still a fair bit of cash to deploy, cash and uranium to deploy, but it's become reasonably priced the old-fashioned way. They both grew the company with a slow, careful deployment of cash, and the price came down. It's important to note, too, that Amir Adnani, also the founder of Gold Royalty, has done a very good job of investing in shareholder relations for 20 years. This asset doesn't show up on the balance sheet. It's an expenditure. But there's a cult of, say, 100,000 resource investors that own Amir Adnani stock, various stocks. There is nobody in the world who is as receptive to good news as an existing shareholder. And that 100,000 shareholder cult established by Amir probably was established with a financial public relations cost over 20 years exceeding $60-70 million. It doesn't show up on the balance sheet, but it lowers his cost of capital. That's an important competitive advantage. Amir has done a very good job, too, of surrounding himself with a first-rate team and spreading the general administrative charge associated with both financial public relations and this team across 6 or 7 listed entities. These are the types of attributes that don't seem to be talked about too much in research reports or blogs or newsletters, but they're the type of thing that sophisticated investors have to consider when they're looking at the relative advantage company by company. If there's something that you can see that isn't expressed in the market, but will likely lower the cost of capital in an ensuing market relative to a competitor, that is something that you have to consider in terms of your valuation and your.
Understanding the economic and geopolitical influences on silver prices is crucial to grasping why Rick Rule believes silver could skyrocket to $500 per ounce. These broader factors shape market dynamics and investor sentiment, often driving significant price movements in precious metals. One of the primary economic influences is inflation. In recent years, we'd have seen a notable increase in inflation rates across major economies. This inflation surge is driven by several factors, including expansive monetary policies, supply chain disruptions, and increased government spending. Historically, precious metals like silver and gold have been seen as hedges against inflation. As inflation erodes the purchasing power of fiat currencies, investors flock to tangible assets that retain value. Silver, with its lower price point and high liquidity, becomes an attractive option for investors looking to protect their wealth in an inflationary environment. Additionally, the current global economic policies play a significant role. Central banks worldwide have adopted unprecedented monetary stimulus measures to combat economic downturns caused by events like the COVID-19 pandemic. These measures, including low interest rates and quantitative easing, have flooded markets with liquidity, raising concerns about long-term inflation and currency devaluation. As a result, investors are seeking safe haven assets to mitigate these risks. Silver, often referred to as poor man's gold, provides an affordable entry point for those looking to diversify their portfolios away from fiat currencies and into tangible assets. Geopolitical tensions also significantly impact silver prices. In times of political instability, such as conflicts in the Middle East, trade disputes between major economies, or tensions in Eastern Europe, investors tend to seek refuge in safe haven assets. These geopolitical risks create uncertainty in the markets, driving demand for precious metals. Silver benefits from this flight to safety, often experiencing price increases during periods of heightened geopolitical risk. Moreover, the global economic recovery is uneven and fraught with challenges. While some regions are experiencing robust growth, others are struggling with economic stagnation, debt crisis, and political instability. This uneven recovery creates a complex economic landscape where the demand for silver can be influenced by varying factors across different regions. For instance, strong industrial demand in growing economies can drive silver prices up, while economic slowdowns in other areas can create short-term volatility. Another critical factor is the ongoing debate around green energy and sustainability. As countries strive to meet their climate goals, there is an increasing push towards renewable energy sources. Silver plays a crucial role in this transition, particularly in solar energy. Solar panels require significant amounts of silver for their photovoltaic cells. As governments and corporations invest heavily in solar energy projects to reduce carbon emissions, the demand for silver is expected to rise. This growing demand from the renewable energy sector provides a robust long-term support for silver prices. Furthermore, economic policies in key silver-consuming countries significantly influence the market. For example, China's industrial policies and economic performance have a considerable impact on silver demand. As China continues to invest in infrastructure, technology, and renewable energy, its demand for silver is likely to increase. Similarly, economic developments in other major economies, such as the United States, India, and the European Union, play a crucial role in shaping silver demand. The monetary policies of major economies also have a direct impact on silver prices. For instance, if the Federal Reserve or other central banks signal a continuation of low interest rates and accommodative monetary policies, it tends to be bullish for precious metals. Low interest rates reduce the opportunity cost of holding non-yielding assets like silver, making them more attractive to investors. Conversely, if central banks take a more hawkish stance, raising interest rates to combat inflation, it could lead to short-term volatility in silver prices. However, given the current economic uncertainties, many analysts, including Rick Rule, believe that the era of low interest rates may continue for some time, supporting higher silver prices.
By having really high-quality portfolio managers and analysts, not flunky investment bankers who failed in technology and failed in consumer durables and have been put down in the gold space because they can't do any harm there. but rather people who over 2 or 3 decades have made money in resources where the rubber meets the road. People who I've observed for 3 decades. There's probably 100 people that want to speak at our conference every year, and they're politely thanked and excused. Our exhibitors, at every other investment conference that I know of, the qualification to be an exhibitor is a pulse and a check that cashes in reverse order of importance. At our conference, if you're a public company exhibitor, you have to be owned in accounts owned and managed by us. No guarantee, sadly, Andy, that if I own a stock, it goes up in price. But there is a guarantee that the vetting process is honest. I've written them a check as opposed to them writing me a check. If you're a bullion dealer or a coin dealer, you have to have been in business for long enough that I know you, and I have to have received no customer complaints. That includes, my 30 years with Global Resource Investments and then Sprott. No customer complaints from 15,000 clients over 30 years. It's a fairly tough bar. And as a bullion dealer, you have to be a dealer that Battle Bank would be willing to extend a credit agreement to. Not that they'll necessarily accept it. The point is that every single exhibit there has been vetted. That's very important because our attendees for 28 years have told us that the exhibitors aren't just advertisers, they're content too. So that's what we've done. Then finally, there's the living legends. And that's maybe my secret sauce. The living legends are a group of people who have built multi-billion-dollar natural resource companies from scratch, taken things from 5 million market capitalizations to $5 billion market capitalizations. The guys who've had 3 zeros, okay? And what's great about this is that they teach us how they did it. They teach us the mistakes they made. They teach us really how to identify a company in the $20 billion market cap range that could go to $2 billion.
Looking back at historical case studies of silver price surges provides valuable insights into the potential for future price movements. Rick Rule often emphasizes that understanding past market dynamics can help us anticipate how current conditions might unfold. Let's delve into some notable periods of silver price increases and draw parallels to today's market. One of the most dramatic surges in silver prices occurred in the late 1970s and early 1980s. During this period, silver prices skyrocketed from around $6 per ounce in 1978 to nearly $50 per ounce in January 1980. This unprecedented rise was driven by a combination of factors, including rampant inflation, geopolitical tensions, and aggressive market speculation. The Hunt brothers, 2 wealthy investors, attempted to corner the silver market, driving prices to record highs. While their actions were extreme, the broader economic environment of high inflation and geopolitical instability played a crucial role in creating the conditions for such a surge. Fast forward to the early 2010s, and we witnessed another significant rally in silver prices. Following the global financial crisis of 2008, central banks around the world implemented expansive monetary policies, including quantitative easing and maintaining low interest rates. These measures were aimed at stimulating economic growth, but also led to concerns about inflation and currency devaluation. By April 2011, silver prices reached nearly $50 per ounce again. This rally was fueled by investor fears of inflation, economic uncertainty, and a renewed interest in precious metals as safe haven assets. The parallels to today's economic environment are striking, with similar concerns about inflation and economic stability driving interest in silver. In both of these historical cases, the underlying economic and geopolitical factors played a significant role in driving silver prices higher. Rick Rule points out that today's market conditions share many similarities with these past periods. High inflation, expansive monetary policies, and geopolitical uncertainties are once again at the forefront, creating a supportive environment for silver. Moreover, the industrial demand for silver today adds an additional layer of bullish potential that was less pronounced in previous surges. The technological advancements and the global shift towards renewable energy significantly increase silver's demand profile compared to past decades. For instance, the rise of solar energy and electric vehicles directly impacts silver demand, creating a new dynamic that could drive prices even higher. Rick Rule also emphasizes the importance of the gold-to-silver ratio in understanding silver's potential. Historically, a high gold-to-silver ratio has often been followed by substantial silver rallies as the market corrects this imbalance. Currently, the ratio remains elevated, suggesting that silver is undervalued relative to gold. This condition is similar to those seen before previous major surges in silver prices, reinforcing the argument for a potential significant price increase. Additionally, the current economic environment, with its unprecedented monetary stimulus and low interest rates, mirrors the conditions that have historically led to precious metal rallies. As investors seek to protect their wealth from inflation and currency devaluation, the demand for silver as a safe haven asset is likely to increase. This scenario sets the stage for a possible repeat of the significant price movements seen in past decades. Rick Rule's insights also highlight the role of market sentiment and speculative activity in driving silver prices. During past surges, periods of heightened investor interest and speculative buying contributed to rapid price increases. Today, with silver still relatively under the radar compared to other assets, there is substantial room for speculative interest to grow. As more investors recognize silver's potential, increased buying activity could amplify price movements. In summary, historical case studies of silver price surges reveal common themes of economic instability, inflation, and geopolitical tensions driving demand for silver. Today's market conditions share many of these characteristics, with the added factor of rising industrial demand from technological and renewable energy sectors. According to Rick Rule, these parallels suggest that silver is poised for another significant rally, potentially reaching unprecedented levels. As we continue, we'll explore investment strategies recommended by Rick Rule to capitalize on this potential and outline how investors can position themselves to benefit from the anticipated surge in silver prices.
Easy year, particularly given the years that came before it. There is a time to write checks, which is when nobody else is doing it, and there's a time to cash checks, which is when everybody else is writing them. So certainly the first part of this year, like the last half of last year, as an example, the uranium juniors, or any place that was hot, I was beginning to cash checks. In most of the rest of the portfolio, I'm still writing checks. It seems to me right now we're in a sweet spot. The commodities have moved. The interest is around the stocks, but a lot of people haven't pulled the trigger yet, for fairly understandable reasons. As an example, the gold has moved because of central bank buying, and the central banks don't buy gold stocks. So the dichotomy between the move in gold and the lack of move in the gold stocks is fairly obvious. History teaches us that after gold is established, the physical gold has established the uptrend, that eventually the gold stocks follow. So when I say we're in a sweet spot, I really truly think we're in a sweet spot. The condition precedent for the gold stocks to move has already occurred, and the gold stocks haven't moved yet. There is a skepticism in the market because of the tepid response of the gold stocks, which keeps other people from competing with knowledgeable speculators such as myself. This feels to me just like as good as it can possibly get. I need to say that when I talk optimistically, I stick to the proposition that I made the last time you interviewed me, which is to say that if you look at the length and breadth of the junior market, probably 80% of them are valueless. So you can't invest in the sector, but probably 5% of the companies generate so much performance that they add legitimacy and luster to a sector where 80% of the participants are valueless. And it is that 5 to 20% that I'm talking about. When they say that there's no financing available for juniors, that's hokum. Most of the juniors aren't financeable. I have participated, I think, in about 20 financings in the last 24 months. And at least 15 of them were oversubscribed, meaning despite the fact that I'm a fairly high-profile investor, somebody who companies like to have on their roster, I got cut back on my subscription. That doesn't seem to me to be a capital short market. But that notwithstanding, I think there are very, very good companies available for very fair prices, and that's a wonderful circumstance. And I use gold as an illustration, but
to capitalize on the potential surge in silver prices, it's essential to consider the investment strategies recommended by Rick Rule. His extensive experience in natural resource investments offers valuable insights into how investors can position themselves to benefit from silver's anticipated rise. Here are some key strategies. Diversify your holdings. Rick Rule emphasizes the importance of diversification within the precious metals sector. This means not only investing in physical silver, but also considering other forms of silver investments. Physical silver can be purchased in the form of coins, bars, or bullion, which provides direct exposure to silver prices. However, investors should also look at silver-related stocks, exchange-traded funds, ETFs, and mutual funds. Companies involved in silver mining, refining, and production offer leveraged exposure to silver prices. When silver prices rise, these companies often experience outsized gains due to their operational leverage. Focus on quality mining stocks. Investing in high-quality silver mining companies is another strategy Rick Rule advocates. He advises looking for companies with strong balance sheets, low production costs, and high-quality assets. These companies are better positioned to weather market volatility and benefit from rising silver prices. Rule suggests focusing on Tier 1 projects that have large, high-grade reserves and are operated by experienced management teams. Companies with these characteristics are likely to outperform during a silver price rally. Explore junior miners and explorers. While larger mining companies offer stability, junior miners and exploration companies provide significant upside potential. These smaller companies are often undervalued and can offer substantial returns if they discover new silver deposits or develop existing projects successfully. Rick Rule highlights the importance of thorough research and due diligence when investing in junior miners. Look for companies with experienced management teams, promising exploration projects, and a history of successful discoveries. Consider silver ETFs and mutual funds. For investors looking for a more hands-off approach, silver ETFs and mutual funds can provide diversified exposure to the silver market. ETFs like the A-Shares Silver Trust, SLV, track the price of silver and offer a convenient way to invest in the metal without the need to store physical silver. Mutual funds that focus on precious metals often include a mix of gold and silver investments, providing broader exposure to the sector. These funds are managed by professionals who actively adjust holdings based on market conditions. Timing and market sentiment. Understanding market sentiment and timing your investments is crucial. Rick Rule advises paying attention to the gold-to-silver ratio as an indicator of silver's relative value. When this ratio is high, it suggests that silver is undervalued compared to gold, potentially signaling a good buying opportunity. Additionally, keeping an eye on economic indicators, central bank policies, and geopolitical events can help investors anticipate market movements. Rule recommends gradually building positions during periods of market weakness to take advantage of lower prices. Long-term perspective. While short-term price movements can be enticing, Rick Rule stresses the importance of maintaining a long-term perspective. Precious metals investments, including silver, can be volatile, and prices may fluctuate significantly over shorter periods. However, the long-term fundamentals for silver remain strong, driven by industrial demand, economic uncertainty, and inflationary pressures. By adopting a long-term investment horizon, investors can ride out short-term volatility and benefit from the underlying trends that support higher silver prices. Physical silver storage and security. If you choose to invest in physical silver, consider the logistics of storage and security. Keeping silver in a safe and secure location is essential to protect your investment. Options include home safes, bank safety deposit boxes, or professional vault storage services. Each option has its own costs and benefits, so it's important to choose the one that best fits your needs and risk tolerance. Stay informed and flexible. Finally, staying informed and being flexible with your investment strategy is key. The precious metals market can be influenced by a wide range of factors, and staying up to date with the latest news, market trends, and expert opinions can help you make informed decisions. Rick Rule advises investors to be adaptable, ready to adjust their strategies as market conditions change.
Told by my staff, hopefully accurately, that between myself and Agora, who I used to manage that event for when they owned it, that we've been putting that event on for 28 years. We've tried to make it a little better every year. And if you make something a little better every year for 28 years, it ends up being pretty good. And I would suggest, not humbly, that ours is the single finest natural resource investment symposium on the planet. Why? Well, first of all, we have a core of attendees who goes back 28 years. The idea that all the knowledge in the room resides in the dais, and that knowledge is transferred to the audience is bullshit. We will have 400 or 500 experienced, wealthy investors trying to grow their wealth and preserve their wealth. So there's going to be an awful lot of wisdom in the room, not just on the dais. I would suggest that we have the best group of core attendees of any investment conference on the planet, the single best. You get that for free. What else do we have? We have great big picture gurus, people who tell you about the world the way it is, not the way that ABC and the Wall Street Journal and CBS and the CBC wish it was. Jim Rickard's talking about Wall Street as the former chief counsel of long-term capital management, which damn near brought down Wall Street. Somebody who knows about the stresses because he created some of them, Nomi Prinz, talking about the structure of Wall Street, former partner at Goldman Sachs, former analyst. She's from the belly of the beast, Daniela DiMartino Booth talking about the Fed because she was at the Fed. Grant Williams. It's important to have your paradigm shaped in a way that allows you to question what you see on TV or what you read in the newspapers. We follow that.
Rick Rule's analysis and the factors we discussed all point towards an exciting potential for silver to reach $500 per ounce. This conclusion isn't based on speculation alone, but on a solid foundation of market dynamics, historical trends, and forward-looking economic indicators. Silver's current undervaluation compared to gold, highlighted by the historically high gold-to-silver ratio, suggests that silver has substantial room to appreciate. This ratio correction alone could propel silver prices higher as the market seeks to realign these two precious metals. The growing industrial demand for silver, driven by its critical role in technologies like solar panels, electric vehicles, and 5G infrastructure, adds a robust and expanding source of demand. These technological advancements are not just trends but are central to the future of global energy and communications, ensuring sustained and increasing use of silver. The economic landscape further supports this potential surge, with inflationary pressures mounting due to expansive monetary policies and unprecedented government spending. Investors are increasingly turning to tangible assets like silver to preserve their wealth. Silver's dual role as an industrial metal and a safe haven asset makes it uniquely positioned to benefit from these economic conditions. As inflation continues to erode the value of fiat currencies, the demand for silver as a store of value is likely to grow, pushing prices higher. Geopolitical tensions and economic uncertainties also play a significant role. In times of political instability or economic turbulence, investors seek out safe haven assets. Silver, often seen as poor man's gold, becomes an attractive option due to its lower price point and potential for high returns. The ongoing geopolitical risks, whether from trade disputes, regional conflicts, or global economic shifts, create an environment where precious metals like silver are highly sought after. Historical case studies provide a clear precedent for substantial silver price increases under similar conditions. The late 1970s and early 2010s saw silver prices soar due to a combination of economic instability, inflation, and increased investor demand. Today's market shares many of these characteristics, suggesting that a similar surge is possible. Rick Rule's insights into these historical trends and his understanding of current market dynamics reinforce the argument for silver's explosive potential. Investment strategies tailored to these insights can position investors to capitalize on this potential surge. Diversifying across physical silver, quality mining stocks, junior miners, and silver ETFs provides a balanced approach that leverages both stability and high growth potential. Timing investments by monitoring market sentiment and economic indicators can enhance returns, while maintaining a long-term perspective helps navigate short-term volatility. In conclusion, the convergence of undervaluation, rising industrial demand, economic uncertainty, geopolitical tensions, and historical precedents creates a compelling case for silver to potentially reach $500 per ounce. Rick Rule's expertise and analysis offer a roadmap for investors looking to navigate this opportunity. As the global economy continues to evolve and technological advancements drive silver demand, this precious metal stands out as a uniquely promising investment. Subscribe for more insights and strategies on market trends and investment opportunities. And remember, this is not financial advice. Always do your own research before making any investment decisions.
Of where they're exploring today, the 2 properties in the company, $1.2 million in cash with a $2 million market capitalization valuation. This agglomeration of intellectual capital, were this a different type of market, would have a $10 million pre-money market capitalization. So I'm pretty attracted to that. And then something that we're going to talk about later in this interview, the higher quality third tier royalty companies have sold off in price uniformly uh, because they bore people. Free cash flow is not a boring topic. And you have some of these companies which have one form or another of definable competitive advantage over their peers. And there are several types of that have reasonable asset spreads, reasonable cash generation now with the probability, or in some cases, the certainty of increased cash flow from projects that are under construction. There's two things that happen here. Either the share prices go up, or the larger royalty companies with higher share prices and lower cost of capital acquire them. Those are the only two things. It reminds me of the old Purolator oil filter commercial, where the mechanic holds up the oil filter, says, "You can pay me now," or he points to a blown engine, says, "You can pay me later." Either's okay with me. So I'm attracted to that. And then finally, I'm attracted to the behemoths. I'm attracted to ExxonMobil. I'm attracted to BHP. Because I can handle political risk, I'm attracted to Glencore. The interest around Anglo-American tells you that these great big companies are selling for below the value of the sum of the parts. And if you believe, as an example, as I do, that over 5 years a higher copper price is inevitable, the best way to play the game is with a company that has a whole bunch of copper. You don't have to permit these mines. You don't have to finance these mines. All you have to do, if you have a 30 or 40 year, a generational ore body, is mine it and sell it into a rising market. If you have an existing project pipeline, you don't have to go face it. And while you're waiting for these wonderful things to happen over 5 years, you get paid very attractive dividends. So the time value of money between now and the supposed catalytic event is negative because you're getting paid a good dividend. So I'm attracted to that too.